All right, so this is actually me, and right now I'm going to jump straight into the presentation. And here I'm going to just input to you 5 simple steps. All right, 5 things that you need to know in order to maximize your usage of the tools given by Bursa Malaysia and as well as Bursa Marketplace. Okay, so there are 5 steps, and I'm going to go into step number 1 right away. So step number 1 is to actually know your objectives. Now, here's the thing. So I'm actually really blessed, really fortunate to be living in this country, Malaysia. Because why? Because we get to invest in some of the best businesses in the country, and we need actually investment information. All right. Now this is very important. So why do I say I'm blessed to be here in Malaysia? Is because we have Bursa Securities, we have Bursa Malaysia, whereby they actually compile. It's a place where I can actually compile a lot of investment information, which are very valuable, and I can actually process it, and I can actually make a very informed investment decision from it. Now, with that said, okay, ladies and gentlemen, here's the thing that I would like to actually impart to you today. First of all, if let's say there is Bursa Malaysia giving you the best tools, best research tools in the world, but you do not have an objective, you do not have an idea how to best use this particular tool to actually make a profit from yourself, then the tool is actually pretty redundant. So that's why I believe that step number 1, very important, before we actually use the tool, is to get to know your investment objective. So for a start, how do you actually define your objectives? Okay, so I will actually break it down into 3 simple parts, all right, which is here. The first one is gain, the second one is skills, and the third one is time. So I think if you are listening to me, I think you can actually just play around with me, and we can just learn, share, and explore all this stuff together. So let me start with gain. So gain is this. So let's take a moment back and just ask ourselves, how do you intend to make money from the stock market? Okay, so this is actually a very important question, because a lot of people say, oh, do you invest for dividend income or do you invest for capital gains? Some people say I invest for dividend income, which is actually pretty more certain. Whereas for capital gains, all right, then the next question is this: what is the capital? How much capital gains would you like to achieve? All right. Now, this is actually a very subjective question. This is a question where there's no right and wrong answer. Okay, so this one takes some time. It's not like a 1-minute answer. All right, it doesn't take 1 minute to answer this kind of question. It takes some sort of learning, soul searching in order before you can actually truly answer this kind of question. Now, for me, I actually invest for dividend income. Okay, oops. And my second priority is actually long-term capital appreciation. This, of course, is what people want. And of course, there's another way for people to actually gain in the stock market, which is to do some sort of a short-term trading. All right, so that's why I put there short-term trading profits. Now, which of the 3 is actually suitable for you? Is it dividend income? Is it long-term capital appreciation? Or is it short-term trading profits? Now, if your objectives are in regards to gains is actually different, all right, how you use Bursa Marketplace will be very different. Okay, so that's why you got to actually know what sort of gain would you like to actually achieve from the stock market before you actually use this tool. Okay, so this is actually very important. Now I'm going to move on to skills. So this is actually very important, because if you don't have skills, then it's actually redundant to talk about the gains that you can actually achieve. Now, what are the skills that you need to have in order to actually profit from the market consistently? Now, the keyword here is consistency, because you do not want to just rely on luck itself to actually make money from the stock market. You don't want to make 1 or 2 good deals, all right, and then you lose it all in the next 3 or 4 more deals. You want your gains to be consistent, and that is why I believe that you are here today listening to me on how you can actually profit from the stock market consistently. All right, so which is a long-term thing. Now, there are 2 schools of thought when it comes to skills. The first one is actually fundamental analysis. So fundamental analysis is actually an analysis of the business performance. Okay, so this means to say, if you are talking about AirAsia, you want to know exactly what AirAsia is doing, what is it, how much sales has it been generating over the last 5 to 10 years? How much profits or losses has it made for the past 5 to 10 years and stuff like that? Okay, so that is actually fundamental analysis. Now, there's another school of thought which is called technical analysis. So technical analysis is an analysis of the stock price. All right, so we are going to talk about stock price performance. All right, so this means to say we are talking at, if you are looking at technical analysis, you don't just look at the company's business performances. Rather, we are looking at the charts, whereby how do you actually assess whether this is a good time to buy, hold, or sell. So this is actually technical analysis. And then we got the third one, which is time. So how much time, all right, or energy do you have to manage your stock portfolio? Okay, so this is actually very, very important. All right, so let me give you an example. For instance, all right, let's talk about gains. And let me just give you an example. Let's say one of you choose, I would like to achieve, or I would like to gain from the stock market by doing trading. And I would like to do short-term kind of trading, let's say day trading or what. All right, so short-term trading. Short-term means to say it could be in the span of days, it could be in the span of weeks, it could be as short as milliseconds. Okay, so let's keep it to day. All right, so that means to say you want to buy at 9 a.m. and then you want to sell at 3 p.m. Okay, so that is how you want to gain. The next question is, do you have the skills to do it? All right, so if you want to buy a stock at 9 a.m. and then you want to sell it at 3 p.m., that means to say you need to acquire, the skills that you need to acquire is actually technical analysis. All right, so this means to say you need to have the skills to actually analyze the charts. Now, if you do not have the skills to analyze the charts, then it's quite redundant for you to say, I would like to trade for short-term profits. Now, let's assume that you have this technical analysis skill. So now we move on to the time. All right, so how much time do you have to actually manage your portfolio? So let's say, for example, you are an employee, all right, and you have a 9 to 5 job, or you have multiple businesses, all right, or like me, you have multiple various ways of making money or making a living. So you're actively involved in multiple business, and you don't have time for all these things. So it's also quite redundant. It's also quite redundant for you to say, I want to trade for short-term profits, because you don't have time and energy for it. So can you see why gains, skills, and time has to be in unison? All right. So now, if you are listening to me and you are basically an employee and you want to generate an additional source of income. So let's say, for example, today I'm going to share with you the things that I do and how I make my money, which is dividend income. All right, this is actually very suitable for people who are passive. Passive means to say you can actually do this at your own time. At a passive way, it means to say you can actually do this on a part-time basis. All right, so if you want to get dividend income, or you want to actually invest for long-term capital appreciation, the skills that you need is actually fundamental analysis. So this must be your core strength. All right, so if you don't have this particular strength, you can't actually do dividend investing. All right, so if you are one of those who do not know how to actually read financial reports and stuff like that, so it's best for you to first learn how to do fundamental analysis. Now, let's assume that you have it and you do not have much time. Good news for you, you can actually do this on a part-time basis or on a free time as you go kind of basis. So it's very important for you to know your objectives and make sure it's in line with your skill sets or sets of skills and time. Okay, so for this webinar, let me just focus on what I do best, which is to make dividend income. And let's just assume that this is also your objective. And therefore, if let's say I'm investing for dividend income, so I'm going to move into step number 2. So what kind of information do I need? So I'm not going to just go into Bursa Malaysia, because there are plenty of information there. I visit the website nearly every single day, and there are plenty of information and tools, the resources, the materials out there. So I need to be very clear about what I need first, okay? What is important to me as a dividend investor. So here I will break down into I have actually listed down 8 information that I really need as to be good as a dividend investor. So the first one is company profile. So this is actually very important because I need to know what exactly the stock is doing, what kind of business is it doing, what kind of industry. So this is company profile, very important. Number two, as a dividend investor, I would like to see my income grow. Personally, for me, it can be a quarter-to-quarter basis. It can be to yearly basis. So that means say every quarter my dividend income must increase, or every year my dividend income must increase. So in order to do that, these 2, 3, and 4 will be very, very important. The sales must grow, which means revenue must grow consistently. Profits must also grow consistently. And of course, if you are thinking about dividend investing, you need positive cash flow. Now, with that said, I'm not gonna just sidetrack. I'm not gonna just sidetrack and not sidetrack, sideline. All right. For those of you who are thinking about investing for long-term capital growth, I also want to include you into this presentation. All right. So first of all, if you are a growth investor investing for long-term capital appreciation, this 4 is also necessary. Okay. Why? Because if you are a dividend investor, you need to also have the stock to actually report consistent growth in sales and profits. And whereas cash flow, it needs to be positive. Why? For very different reasons. For a dividend investor, the positive cash flow is for the stock to pay you dividends. No cash, no dividends. Okay? So that's why you need to look at cash flow. Whereas for growth investor, positive cash flow is very important because you need cash to invest. All right, the stock needs to have abundant in cash flow for it to actually finance its future investment. All right, this is very important. If the company got no cash to invest, then the company may have to borrow. All right, or to raise more money from people like you and me, investors, through private placements, rights issues, and stuff like that. Okay, so this is actually very important. Now, back to dividend investing. So the 5th one is dividend yields. So this one is actually very important. Okay, and how do you calculate dividend yields? I'm going to show you in a while's time. Number 6, dividend payout ratio. Also, I will share with you the formula later. This is actually where my secret weapon is. All right, the number 7, the 7th information. All right, I will always find stocks that have tangible growth plan. So this is actually very important. So what do I mean by that? So first of all, we need to understand that past successes does not guarantee future successes. All right, but it has a resemblance. So the first thing to do is to find out the company's past record, whether it has been there, done that. All right, so that's why we look at the company's past record. All right, and usually I will look at there's a question that asks people ask me, do I look at the past 12 months only, or do I look at the past 5 to 10 years? The answer is I look at both. All right, if you look at the past 5 to 10 years, that is the real past. And if you look at the past 12 months, then you are looking at the present, whether the stock is making money as of today, as of now. Now, tangible growth plan is for the future. Okay, so I'm going to share with you in this webinar the tricks that I use to actually find the actual materials that I actually find in a stock when it comes to their growth plan. So I'm going to just share with you all this stuff today. And finally, I'm going to talk about price trend. Okay, how do you actually use the information given at Bursa Marketplace to actually identify a stock's midterm price trend? All right, so let's go on to the formula. So I'm going to just do this very quickly because it's actually a very simple formula. So step 2.A, okay, to calculate dividend yields. So just now, all right, I say here, I have actually give a brief introduction. My average portfolio yield is about 6.8%. Okay, so this is how you calculate dividend yields. Okay, so you have dividends per share, and then you divide it by the current stock price, and then you multiply by 100%, and there you go, dividend yields. Okay, so I'm going to just go through 2 examples very quickly. So there are 2 stocks, both of them give the same kind of dividends, which is 10 cents a share, and the stock price for example 1 is actually $2. All right, so therefore, if you use the formula 10 cents divided by 2 ringgit multiplied by 100%, therefore your dividend yield should be 5%. Okay, so example number 2, dividend per share is 10 cents. Current stock price is 1 ringgit. So therefore your dividend yield is 10%. So the idea to get high dividend yields is very simple. Make sure you buy a good stock at its lowest possible price. All right. So don't chase for a stock where it has actually flew up high. All right, like 200%, 300% over the last 6 to 12 months. That won't work. All right, if you are a dividend investor. Dividend investor means you buy it at the low price, because remember the formula, current stock price, all right, it's here, all right. So therefore you need to get good stocks and make sure it's low price. Very important. Okay, so that's the first formula. Now the second formula is this dividend payout ratio. So this is the formula. So we have dividend per share. Now the difference between dividend yields and dividend payout ratio is this: dividend per share divided by earnings per share multiplied by 100%, and there you get it, dividend payout ratio. So what's the significance of this particular formula? Now I'm gonna use this example. Example number 1. All right, so we have a stock. All right, it pays out 8 cents a share in dividends, and then this stock actually earns 10 cents a share. Okay, so that means to say for every dollar it pays out 8 cents. For every dollar it pays out 80 cents, or 80% of its earnings in the form of dividends. So therefore dividend payout ratio is about 80. Okay, example number 2, the same stock. All right, another stock, it makes 10 cents a share, it pays out 2 cents in dividends. So therefore if you put in the formula, dividend payout ratio is 20%. So now here's a significant part. Okay, so both stocks earn the same, 10 cents a share. One pays 8 cents, the other one pays 2 cents. All right, so at the end of the day, the stock which is at example 1 will actually retain 2 cents a share. Example number 2, the stock will actually retain 8 cents a share. All right, the one that has 2 cents will have lesser money to actually invest for growth. The one that has 8 cents retained within the company has more money or financial resources to invest for growth. All right, so therefore example 1 here, all right, it's for dividend stocks. All right, it's good for dividend investing. Whereas for example 2, this kind of stock is good for growth stocks, growth investing. Okay, now the similarity between people who invest for dividends and people who invest for growth is this: both stocks must be highly profitable. That's the similarity. The key difference between the two is that one has a higher dividend payout ratio, the other one has a lower dividend payout ratio. The one has a high dividend payout ratio is a dividend stock. The one that has a low dividend payout ratio is a growth stock. Okay, so that is settled. Now, step number 3. Okay, since I've actually listed down the objectives and what sort of information I need, now it's time for live demonstration. So I'm going to show you a simple trick on how to save up 90% of your time doing your homework and research on stocks using Bursa Marketplace. So with that, let me just go to my Bursa Marketplace. All right. Okay, so this is the website, Bursa Marketplace. As you can see, there are plenty of things going on. And if you are new to this particular website, don't be overwhelmed. All right. So the first thing that if you are a dividend investor, the first thing that you should click onto is this: screen your stock. So just click onto this. And what will appear is a screener that is built by Bursa Marketplace. Okay. Now, what would you like to screen? So of course, we will look into stocks. And we have total matches of 936, which means to say in Malaysia, we have about 936 public listed companies listed in Bursa Malaysia. Okay, So since we haven't even started to use this filter, use this screener, so therefore the total matches will be 100% of the stock, which is 936. Okay, so don't bother about all these things. If you're a dividend investor, the number one thing that you should look into is this, dividend yield. Okay, so here we have two choices. Number one, up to 5%, which is anything below 5%. Number two, above 5%. Okay, which is anything above 5%. So meaning to say, for every 1,000 ringgit you invest, if you want to make more than 50 ringgit in dividend yield, then you should choose above 5%, which I'm going to click onto it right now. Now, as you can see, your total matches has actually dropped from 936 to 102. Okay, so this has actually eliminated nearly 80%. All right, 80% of the stocks in Malaysia. So only about 10 to 20% of the stocks in Malaysia pay more than 5% in dividend yield. But as you can see, the total matches is actually 102. There's still plenty of shares. So what do we do? For me, I will basically go to market cap. Now, what is market cap? Market cap is actually this. Let's say, for example, we got AirAsia, all right? And AirAsia has a market cap of 14 billion. If I can remember, to my knowledge, around 13 or 14 billion ringgit. What does that mean? That means to say if you got enough money in the whole wide world, you got so much money that you can buy the entire 100% share of AirAsia, all right, which also includes the shareholdings of Tony Fernandez and Dato Kamarudin and the rest of the minority shareholders. The price tag is 14 billion. Okay, so over here we are given three choices: up to 100 million, which is the smaller size company, up to $1 billion, which is the mid-sized company, and AirAsia, of course, is a huge company, right? So therefore, it is above 1 billion. So usually for us, if you want to have stability in your in your portfolio, you can actually choose above. We can choose to be picky, but anyway, let's see how it works. All right, let's click above 1 billion. And right now, from 102, your total matches now has dropped to 24. Okay, so what about the rest? So basically, we don't need to actually bother about the rest because we are now down to the 24. We are now down to only 24 stocks out of 936, which is like less than 5% of the stocks already. So I think it's good enough for us to show result. Right. Okay, and of course, from these 24 stocks, not every single thing is good. All right, so therefore we need to back through each of them one by one. Okay, so where did we pick? Okay, so for here, you can actually slowly pick one by one, but for this particular webinar, I'm just gonna start off with something which is very, very, very simple. Okay, so let me just go to, let's say, should I go with IGB? Yeah, why not? Let's go with IGB. Okay, so basically IGB REIT. So REITs are actually widely known as a category of stocks that pays out very good dividend yields. But let's see. Let me go back to my PowerPoint slides. Now this is the checklist that we need. So the first one is company profile. So how do I get to my? Now I need my, what do you call? Hold for a sec. Where do I get? Okay, I don't think I need this anymore. Okay, so first of all, we need the company profile, which is here. We can click on to read more. And it will be given here. So Bursa Marketplace has actually kindly put in the company profile for us, and all we need to do is just read. So basically, it's very important for us to understand.
We can't
yeah?
see your screen. You need to share your
screen. Can't see my screen.
Yeah.
Okay. Where should I go?
Beneath the microphone, there is a two logos. One is like a double screen. You just click on that to show your screen.
Hold on. Is it this?
Yes, correct. But we can't see your webcam already.
Okay, so where have I missed it? Is it here? Alright, I'm just going to go back.
Sorry, Ian, we can't see your webcam also. You off it already.
Oh, now it's too big, right?
Awesome.
Okay, so I'm just going to go to my screen. Okay, so can everyone see this particular page, the IGB read page? Alright, so I'm going to just continue from here, yeah? And okay, so this is IGB read. I'm going to just go straight down. This is company profile. Click on to read more because you need to know what the company, how the company actually derives its income, how the company makes its money. Very important. All right. So here, Bursa Marketplace has already kindly actually put in the details for you. So I'm gonna just read through. IGB read, as you know, is very simple. It derives income from two investment properties. One is Mid Valley Mega Mall. The other one is the Gardens Mall. It's that simple. Okay. So some are actually very easy. Some are actually harder to digest. Now the easier ones tend to be better. All right, because you need to understand. If you can understand the company's business, what does it do and stuff like that, chances are you will understand your investment much better. Okay, and I hope that this makes sense. So the first information is done. Now we move on to the next information, which is financials. Now click on the financials. Basically, we need to find three things. Okay, don't bother about the key stats for now. I'm going to just click on the income statement. Okay, there are three things that you need to actually make sure in order to find out that this stock is actually a good dividend stock. All right. The first one is actually this revenue. Okay. Now, oops. Let me just do adjustment here. Sorry about that. Okay, so revenue. So as you can see, we have the figures from 2013, 14, 15, 16, and 17. So it's a 5 years. So it's a past 5 years figure. So if you can see that, so these figures are actually standardized in millions of ringgit Malaysia, and that means to say IGB REIT has actually made 430 million ringgit in the year of 2013. 461 million in 2014, 489 in 2015, 507 in 2016, and 525 in 2017. So if you see that this is a growing trend, congratulations, you have passed information number 2 or criteria number 2. Okay, and now let's move on to criteria number 3, which is profits. All right, so I'm going to just skip all this down. Okay, so we have net income. All right, so basically, usually for REITs, we don't actually use net income lah, all right, because the net income, let me just explain why. Because for properties, right, they always have this non-operating stuff lah, all right. So I suppose all this non-operating stuff you need to actually like deduct, because these are all capital appreciation, all right. So IGB REITs, all right, they receive rental income. So this rental income, after deducting the expenses, they will pay you the dividends. But for capital appreciation of the property, means to say Mid Valley has appreciated in price, right? The valuer has said that, oh, this property has actually appreciated. This kind of gains, you won't actually get it in dividends unless the property is sold, all right? Because it's a non-cash transaction. So it's a bit harder for you to see lah. But this one suffice to say, if you can't get it here, you can actually get it from the annual reports of IGB REITs, all right? Because from there you can actually tell whether the company has made a growth in realized income. Okay, so I would say that from this particular from Bursa Marketplace, it doesn't show you that particular information, but what it shows you is that over the past 5 years, it has actually consistently made profits of 200 to 300 million ringgit a year. So let's just keep it a pass. All right, it's a good thing to have profits. Now we move on to the third one, which is cash flow. Okay, cash flow, you look at this one. This is the key thing, cash from operating activities. All right, because this is, if a company shows you this, all right, like IGB REIT shows you 307, 322, everything is a positive figure. Congratulations. This kind of company is, it has generated good income, positive cash flow, and therefore it has the means to pay you dividends. And because it's a consistent basis, therefore your dividend income can be more consistent. All right, so this is actually a very good indicator. So this is actually information number 4, and we have actually cleared that. Now, how much dividend yields are we going to get from IGB REIT? So let's just use key stats. Hopefully it gives you the information that I need. Okay, so basically I will, for this website, I will use this dividend share COMM, should be common stock primary. All right, so use this figure. That means to say IGB REIT, what you say, it pays out 9 cents a share. Okay, now remember the dividend yield formula just now. So we take 9 cents a share and we divide it by the current price, which is 1.51. Okay, so let me just bring you a calculator. Or how about this? If you are listening to this webinar, you can actually pre-calculate, and perhaps you can actually type in the chat box what exactly is the dividend yield that I will receive if I buy IGB REIT at 1.51. All right, so do I have a chat box here? So Edna, do I have a, can I see what's the response like?
Some of them have, some of them answered that it's 5.9%.
5.9%. Yes, okay, so that is your gross dividend yield, all right? So basically, if you buy IGB REIT at 151, therefore you will get 5.96% in gross dividend yield. All right, so congratulations. Oh, okay. So yes, I have hidden my webcam. Okay, but of course for REITs, there's a special thing that you need to actually take care of. You've got to deduct 10% from 9 cents a share, because there is withholding tax of 10%. Especially if you are an individual investor like me, you will get a net of 90% from the 9 cents, which is like 8.1 cents. So roughly you will take 8.1 cents and then you just divide it by 1.51, which is the current price, and you will get your net dividend yield. All right. So let's just do a simple calculation. What if you use 8.1 cents and you divide by $1.51? What would you get as your net dividend yield? So Anna, is there any response?
Haven't yet. They're still calculating.
They're still calculating, huh?
Yeah.
Okay. Make sure that at least we are.
Okay. We got various answers. Some is 5.3, 53.6. Actually, it's 5.36%. They just haven't converted it to percentage.
Okay lah. So it's actually 5.36 lah. So that is your dividend yield lah. All right, 5.36%. Okay. So that is the what do you call, the dividend yield. All right. Now for a dividend payout ratio, IGB, you basically don't need to actually calculate the dividend payout ratio lah. It's definitely more than 90%. Why do I say so? Because in Malaysia, under the Income Tax Act, all right, of course this one you can read annual reports about it. Any REIT that is paying more than 90% or distributes 90% of its realized income, means all the cash profits and stuff like that, the income, right, will not be taxed at the corporate level, but at the investor level, which is the withholding tax. Okay, so that one, it depends on your status lah. So for us, individual investors, Malaysian, it's 10%. But if you're a corporation, it could be another. I mean, say you buy IGB REITs under a corporation like Sendirian Berhad or stuff like that, it could be a different rate. All right. But for this webinar, let's just keep it as individual investors. All right. So with that, let me see whether we can actually get into the next portion of the webinar. Yes, which is step number 4. This is actually the most exciting part, which is finding stocks with growth plans. Okay. Now this one, you need 4 documents. Okay. So just now the first 3 steps. Step 1, objective. Step 2 is about the information that you need. Step 3 is about using the screener to find fantastic stocks, like fantastic dividend stocks. All right, that's step number 3. Step number 4 is about the future. And in order to tell the future, you need 4 documents. All right. Usually, at minimum, the stock will actually provide you with 2. All right. But there are some stocks whereby, especially the ones that are doing very well, all right, or the ones that are very big, they will actually do this too. They will actually issue either investors presentations. They will actually prepare a presentation slide like this to tell you about the company's future plans and stuff like that, or they will actually issue a press release to tell you how the company is doing. Okay, with that, I would like to just take you on the tour to Bursa announcement. Okay. Yeah, Bursa announcement. Okay, which is here. All right. Now, if you do not know how to come here, so I'm just going to share with you a simple tool. So let's say you do not know how to get there. I'm just going to just bring you there lah. So first of all, pick this website. You can just Google it. You just type in Google Bursa Malaysia. Click onto this. You'll arrive. This is the homepage of Bursa Malaysia. So you can just how do I do it? You can just go to products and services. Somehow you'll find it lah. Oh, sorry, not here. It's listed companies. Okay, just click onto listed. Move your mouse to listed companies and just click onto company announcement. And there we have it. So there we are. So as you can see, Bursa Malaysia has this particular website has a lot of information. All right, but we only want to find the ones that are important. So with that, choose a company, and then you choose the type of documents that you need. So first of all, you can actually go into annual report. So I'm gonna just show you some stocks where it has a growth plan, and I'm gonna show you how it looks like. Okay. So let's say, for example, let's do Top Glove lah. Okay, because they have a much nicer presentation. All right, not necessarily mean that you should buy this stock, but I'm just showing you because it has this kind of information. Okay, we have Top Glove. So what do I mean by tangible growth plan is this? Okay, after you look at the company's profile, the financials and stuff like that, you want to know how the company is going to use to actually make money in the future. So therefore, you go to this one, this particular segment, which is letter to stakeholders and management discussion and analysis. So this one could be, okay, usually it's either called chairman statement or CEO statement or management discussion and analysis or CFO statements or whatsoever. Whatever is it, read it, because it contains a lot of gems, a lot of insights on how the company is going to grow in the future. So I'm going to just jump queue and go straight to that particular portion. Of course, in this kind of documents, it has to actually explain how it has fared in the past, okay? And usually the future will be somewhere at the back, okay? Like for example, outlook and priorities for 2018. All right, so this one will tell you exactly what the company is going to foresee in the future, and therefore you should actually read this kind of stuff, okay? And let me just go up and see whether we got other things to actually we got other things where we can actually glean onto. Okay, this is the second part that I would like to bring you. All right, some people actually put it corporate developments. So this is a place where you can actually find whether the stock has the capacity, has the plan to actually grow in the future. So like for example, Top Glove will continue to expand strategically. Okay, so what does it do? Its organic expansion plans include the construction of 2 new manufacturing facilities. So all these things, all right, this is the kind of information that I would like to see if I'm a growth investor, because the more assets, the more businesses it's going to invest into, the more income it's going to make. And therefore, that is what a good growth stock is, all right? It's a stock that continues to invest for growth. So make sure you read this before you actually invest, okay? Now, sometimes, all right, if you can see, this annual report is for the financial year 31st August 2017. But we want to know the latest plan, okay? The latest plan, which is March 2000, the closest date to March, March 6, yeah, March 6. So how do we do that? So with that, we'll go into, let's say, financial results. Click onto this. Okay, click on the financial results. Why? Because this is where you get all the quarterly reports. Okay, if you want the annual, click on the annual reports. If you want the quarterlies, click on the financial results. Click on the submit. Click onto the latest one. Okay, which is for 30 November. Okay, you can link onto it. You can read the latest updates of the company. But more importantly, you can actually find this particular information. Commentary on prospects and targets. Okay, so this is a place where you can actually read the latest updates of the company, which is the second one. Now, this is the third document. Okay, so this is the press release, and of course, this will actually contain information about the company, about its future growth plan. And the final one, which is investors presentation. This one usually, most of it, right? Singapore usually have a lot of this kind of information, but Malaysia, let me just think. Okay, I know one already, because I just download the company. I'm just going to show you how the thing looks like. That's all. Let's see publications. See this? Sometimes you can go to the individual company's website, and you can actually download the latest presentation. Okay, and then you have the PDF files, and then this is where the company will actually tell you whether it will invest in the future or not. Okay, so this is actually a very helpful tool for you to actually decipher whether this is a good company or not. Usually good companies will actually give you this kind of information, so that you don't need to actually spend a lot of time reading. All right, so it's a good, so it shows good investor relations lah. All right, so this is actually the 7th information. And finally, I got only 10 minutes. Actually, I got so much to share. The final one is actually price trend. So let's go back to my slides. So I better speed it up. The final step is to have a trading plan. Now, this one is actually very important because number one, you want to buy at the lowest possible price. Okay, so therefore you need to have a trading plan, a basic trading plan, so that you can do two things. Number one, avoid stocks that they are overpriced. Okay, because you do not want to overpay for a stock. That's the first one. The second one is to buy a stock at its lowest possible price, because low price means high dividend yields. All right, so if you want to beat my average of 6.8%, then you need to buy it at a really lower price, lower than mine. Okay, now basically stock prices move in three directions. All right, so it's a fallacy for you to actually believe that every stock that you buy will go up. It's a fallacy, and it's a fantasy. It's a fantasy as well. It moves in three trends. Number one, uptrend. Number two, downtrend. Number three, sideways trend. So personally for me, all right, I will always want to find stocks that will go on an uptrend. Okay, so this is actually the basic lah. All right, but before we go into that, I will also like to share with you the three stages of the price trend, because every single price trend has its stages. So the three stages are as followed: the beginning stage, the middle stage, and the end stage. Okay, so when do I buy, when do I sell? So unfortunately for today, I haven't really actually sell anything, because all the stocks that I buy are dividend machines. All right, so they are dividend paying kind of stocks. So I don't want to sell, because they continue to make money over time. So that's very good. Now, when it comes to buy, okay, I may want to buy at the uptrend, but let's say for example, this is the price chart. This is an uptrend. I do not want to buy at the peak of an uptrend. I would like, ideally, money is made when you buy at the lowest possible price. So therefore, I would like to buy when the stock is either at the beginning stages of an uptrend or at the end of a downtrend. So this is my basic trading plan, and this is what I would like to do. All right. And how do I do that? So I'm going to just go back to Bursa Marketplace, where I can show you how it's done. So let's go back. I think I'm going to just use this. So basically, this is the chart. In order to actually identify price trend, it's very simple. Number one, click on the charts. Number two, there are price charts, candlesticks, and technical indicators. Okay. So this is the price chart. And usually by default, all right, it's on a 3 months basis. All right. So what I will do is I will actually lengthen this. Okay. I'll lengthen this graph. If you are a long-term investor, you will always want to look at the long-term price performance of this particular stock. The bottom one is volume. All right. So sometimes you can actually tell something about the volume. All right. So for example, if the stock is consistently on demand, that means say good times, bad times, people buy and sell these stocks, then you will see this kind of bar chart pretty vibrant. All right. More vibrant than this actually. If you see a stock whereby people suddenly know about it, hey, you should buy this, don't know what stock, all right? Then everyone rush in to buy this particular stock. So that means, so when it comes to volume, right, what will happen is that you have a lot of empty bars here, or very low bars. Then suddenly there's a sharp spike in the volume because everyone go and rush in and buy, okay? So this is what you need to be aware of, okay? We want a stock that is sustainable. So you want a stock which is where the investment community knows about it. Okay. So if you look at the volume like this, it's boleh lah. All right. Now this is the price trend. So it goes up, it goes down. Okay. If you want to track the midterm price trend of the stock, just click onto the technical indicators, whereby you will be given simple moving averages, exponential moving averages, and of course MACD. Now, if you do not understand what is simple moving averages, exponential moving averages, and MACD, don't worry about it. Okay, if you do not understand about this and you think that, hey, I want to get into trading, then this webinar is actually for you. Is to tell you not to get into trading first. Make sure you learn what these three things are first, then only you get into trading. Okay. Personally, I don't use MACD. All right, I'm not gonna explain what is MACD. All right, for long-term or mid-term investors, we'll use simple moving averages. Exponential moving averages, this one is for shorter-term investors lah. All right. So for mid to long term, we use simple moving average. Now the super long term kind of investors will go with 200 days. All right, 200 days simply means it tracks the price performance of a stock for 200 days. If it's 100 days, then it's 100. Okay. If it's 60, 60, 50, 50, 40, 40. Okay. Now for me, I will click onto this. This will help me to track the 40 days, which is the short-term trend. As you can see, once I click onto it, all right, there's a black line that pops out like this. And I need to lengthen my graph again. And I will click onto 100 days. So this technique is called the simple moving average, the SME crossover method. So I'm gonna just, I think I will cover this. I believe I will cover this in more in-depth in future webinars of Bursa Malaysia, I think. All right. I will actually explain the whole mechanism in greater detail. Okay. Although my core is still on fundamental analysis. But anyway, for a short, I'm going to just lengthen the graph so that you can actually, I can explain in brief how you can actually make this information, make use of this information better. Now, the blue line is actually the actual stock price. The black color line is actually the 40-day line, and then the green line is actually the 100-day line. So if you are new to SMA crossover method, just bear with me. Just try to absorb as much as I can possibly share. Okay. Now, if you see the blue line actually go up, right, which means the stock price has actually increased. Can you see that the black line is above the green line? All right, so in order to tell whether the stock price is moving on an uptrend or downtrend, if the black line, which is the 40-day line, moves above the 100-day line, it's an uptrend. All right, that's the first thing. The second thing is all the three lines, the blue, the black, and the green, all move upwards. So that's the second indicator that I will look at to confirm that IGB, REIT, or any stock at the moment is actually moving on an uptrend. Now, how do you spot the downtrend? Now, can you see this? The green line actually moves on top of the black line, which is different from this, where the black is moving on top of the green. Here, the green is moving on top of the black. So therefore, this is the first sign that I look at when I spot the downtrend. Now, second thing is all three lines move downwards. So basically, if I look at this, so I can safely say that yes, IGB rate is moving on a downtrend. Okay. So at this moment, it's on a downtrend. In the past, it's an uptrend. Now, the next question is this: how do I know that an uptrend in stock price will eventually give way to a downtrend? All right. This is not by means 100% indicator, but it's good in I think it will help you. It will give you some tools, some guidelines. All right. Usually, technical indicators, no technical tools in the whole wide world. All right. Not from Bursa Marketplace, not even from anybody lah. All right. Can give you 100% pure accuracy kind of indication. Okay. It's not a fail-proof thing. All right. But it's a good guide. So now, how do you know whether this uptrend will move into a downtrend? So you look at this particular thing. It's called the crossover. That's why the name of the technical analysis tool is called the crossover, which means initially this is the black, and the black move on top of the green. Now the green actually move on top of the black. So this is actually the first sign. All right, the first sign of an uptrend moving on a downtrend. Okay, as you can see, if this is happening, all right, there's a chance perhaps the shares will actually drop in price. That's number one. Number two, can you see that the uptrend has actually slowed down? All right, if the uptrend is slowing down, all right, chances are it will move either to a sideways trend or a downtrend. Okay, so this one is actually my tips my tools where I used to actually identify roughly the midterm price trend of a stock. So hopefully you have understand how you have actually learned a thing or two about how you can actually profit consistently from the stock market. And let me go back to my slides. Let's see what else I have to share. Oh, no more already. So in summary, 5 things. Number 1, if anything at all, know your objective. Why are you in the stock market? How do you intend to make money, and whether you have the skills for it or not, skills and time for it. Number 2, the information that you need. Make sure you have them. Build a checklist Build a checklist of information so that you can actually source for information accurately and much more precisely. It will save you a lot of trouble. Number 3, use the screener. Okay, if you don't have time, use the screener provided by Bursa Marketplace, because it's going to save you a lot of time. Number 4 is to always look at the company's annual reports or the quarterly reports to find out what the company is going to do with your money to grow in the future. If the company has a growth plan, is ambitious to grow, your money will also will most likely grow. All right, that's the hidden tip. And the 5th one is actually to have a basic trading plan so that you don't overpay for your stock, and make sure you buy stocks at their lowest possible price. So with that, thank you so much, and I think we can start doing the Q&A session. So Anna, are we ready?
All right, thank you, Ian. It was an awesome session. So let me take back the screen first. Okay. All right, can you see my screen?
Yeah, I can see your screen.
Okay, give me a moment. All right, now time for Q&A session. All right, the first question we have is, let me see. All right, how do you get financial report from Bursa Malaysia?
Oh, then you have to give me back the screen. Then I'll have to show you. Okay, I will just.
Okay, can I wait? Give you. All right, can you? Okay, you got the.
Yeah, then I think. Okay, let me. I think just now I thought I show you, but never mind. I'm gonna just do it all one more time. Yeah. Okay, where is the place? I need to go to my website. Wait. You can see. You can see my screen, right?
Yes.
Okay. Okay. So here we are again. Hey, wait. Let me just show you. So basically, this is the end product of just now's webinar. So I'm gonna just do a quick demo. Let's say you do not know how to navigate through Bursa Malaysia website. Just type in Bursa Malaysia. Click onto market. Find this word, listed companies, company announcements. Click onto company announcements. See the category here? Click onto annual reports. If you want the annual financial statements, click onto financial results if you want the quarterly financial statements. Choose the company that you want. Let's say you have a company in mind. Let's say AirAsia. Click submit. And it will give you a list of annual reports that have been filed into Bursa Malaysia. There you go. That's how you get your financial reports. Anna, next question.
Awesome. The next question is, how do you rank the 3 components of market? Time, volume, and price, and why? How do you rank the 3 components of market? Time, volume, price, and why do you rank it that way?
Time, volume, and price. First of all, I will look at. Okay, I'm not too sure what time is. First of all, I'll look at price. All right, but before I look at price, my biggest emphasis is not actually the 3. My biggest emphasis is profits. All right, the stock that I buy, whether it's growth or dividend, usually dividend growth lah. All right. actually, if you invest for dividends, right, you can actually get really good capital gains as well. But anyway, with that said, the number one thing that people should look into first is the profits of the company, not exactly the price, the time, or the stuff like that. So make sure you have profits first. Now, with that said, once you have taken care of the profits issue, that means to say the stock has delivered and you think that the company has is capable of delivering good profits in the future, then we look at price. Okay, so profits up, share price down, good idea. All right, very good. I will actually personally look into this share even more. Okay, volume is not really my consideration, because volume is just there to tell me whether this stock, in good times or bad times, whether the stock is whether there are people buying or selling the shares or not lah. Okay, so I'm not going to rank that as my greatest importance. And as of time, market, let's see if I get this right. If this is about market timing, like I said, I just don't want to overpay for my stocks. All right, I always want to buy cheap. I want to buy stocks when they are undervalued. So with that, okay, so with that said, I would like to actually I will do the price trend analysis, like just now what I did, the technical analysis, the SMA crossover method. All right, as long as the stock is not at its peak price, it's actually far away from its peak price, that's a very good sign. If it's actually trading at its highest possible price, then it's not really a good sign for me lah. That's definitely a no lah. Okay, so there you go.
Okay,
I will rank profits, price, time, then the last one is volume. Yeah.
All right, excellent. And next question we have is, please recommend good books for fundamental analysis.
Okay. All right. It depends. All right. There are plenty of good books. Okay. It depends. If you are talking about American books, I will actually recommend Pat Dorsey. It's actually, let's see. Unless do I share how do you get the books, or?
Yeah, sure.
Do I go?
Yeah, sure. Yeah, please go ahead.
Okay, how do I do that? In that case, let's go Amazon lah. All right, let's go Amazon. Go and do a bit of shopping lah. All right. Should I go Pat Dorsey? This is the book. Okay, I got the book cover. So this is the one, the 5 rules for successful stock investing. So if you're looking at American books, so this is one that I highly recommend. Okay, and if you're looking at, let's say, regional, let's say ASEAN, Malaysia or Singapore, you can go with Adam Khoo. All right. So this one you can actually you can actually get this book lah. So I think this one is also quite well written. All right, and of course, not to mention, you can actually look at a few more books. Let me see where I can find it or not. Value growth investing. Okay, this is my friend's book. So it's Rusmin Ang and Victor Ching. So basically, it's called Value Investing in Growth Companies. So if you're into capital gains investing, you can actually look into value investing in growth companies. And of course, if you want something which is more recent, all right. So we have, this is also another of my friend's book. So my friend Stan has actually written a book which is called Value Investing in Asia. So this is actually the latest one, and of course you can actually grab some of this. And of course, I'm also promoting his book in my own website, so you can actually use my own link. Let's go to my website. So I actually have a bookstore. Just click onto digital books. And of course you can read about a little bit about my reviews and what you are expecting to get. And of course you can actually click onto this link to get my friend's book. All right. So these are all physical books lah. All right, and you can actually grab it. So for Malaysian ones, it depends lah. All right. So for myself, I personally do write some ebooks here and there, but I write on really specific topics. Okay. Very niche. I personally will write on something which is really niche. Like for example, intrinsic value. How do you calculate intrinsic value? So this one is more on the Malaysian side lah. Okay, the Malaysian Singapore ultimate guide on how to calculate intrinsic value. So I will actually write something which is really niche.
All right.
So you can actually consider any of these choices lah. Will be great.
Yeah. So that you have a lot of choice for the books. Now, for the next question is that how come 10% withholding tax paid cannot claim for income tax reduction?
This one, I think we have to consult the tax consultant lah. That's because I'm not a tax consultant. So number one, I don't really set the income tax rate. This one is the LHDN is the one setting it, so it's not me. So that's the first thing. The second thing is this 10% we cannot. This 10% I don't think we can claim back. From my experience, this one, right? Because you have a brokerage account, you buy, let's say, a REIT lah, and then okay, I buy REITs, and then the dividend is due. The dividend, by the time you receive your dividend, right, it's already net of the withholding tax of 10%, because I'm a Malaysian individual investor. So my rate is 10%. So therefore, I will get the remaining 90% of the income. So it's like, so that's why when I calculate the net yield, all right, I already factored in that I will be paying the 10% withholding tax. So as to why this withholding tax, right? It's because, number one, at the corporate level, which means I'm going to show you an annual report lah, all right? Just to, so just to like, welcome to my, I'm going to just show you, okay lah, I need, let's say this one lah. Okay, so this is the annual financial statement of a REIT. All right, so this is Pavilion REIT. Now, so you will get the rental income, blah blah blah, and then finally, after they have recorded the transactions, right? Finally, at the final point, can you see this tax expense? All right, you can check it out on other REITs lah. If you find that you have income before tax, which is this figure, and then we have the final figure, which is tax expense, nothing. All right. So this means to say this particular income, all right, it will be first broken into two, realized and unrealized. Like just now I said, just now in Bursa Marketplace, you don't have this realized and unrealized thing. Can you see that the realized and unrealized thing is two different things? Realized is cash, unrealized is not cash. All right, so it's not shown on the Bursa Marketplace somehow lah. All right, that one also I do not know why. That's why I read the annual reports, because I want to know the cash returns. I want to know exactly the cash profits that the company is making, the REIT is making. Okay, so that's the first thing. Now the second thing is back to the tax issue. I'm going to go straight into note 14 so that I can actually explain to you how it works. Okay, so can you see this? Okay, so we have the tax, and then nothing, right? So I'm gonna go scroll down. So this is the Malaysian Income Tax Act 1967. income of Pavilion REIT will be exempted from tax provided that at least 90% of the total income, as defined in the Act, you can ask your tax consultant about it, is distributed to the investors in the basis period for the year assessment within 2 months after the close of the financial year. So you can read this to actually have a much better understanding about the tax treatment for REITs. But suffice to say, for this particular webinar, just know this. Number one, it's not taxed at the corporate level. Number two, the income, once it's distributed, it depends on who you are as an investor, individual or corporation. If it's individual like me, 10%. If it's others, that one I think I got the information. Wait, something just pop up lah. I think this axis rate got right lah. It's somewhere down here. There you go. How do I calculate my distribution? So thank you so much, Axis Rate, for coming out with this. Now it depends from the income. It depends who is the recipient of the income. Is it resident individual, foreign corporate, foreign institution, or foreign individual? Okay, so it depends on who is the recipient of the REIT, of the income from the REIT. Then the net distribution is accordingly. All right, so Anna, I think it's back to you lah. If you want to calculate, just download this report lah, and you'll get an idea.
All right, awesome. Okay, the next question is about dividend yield. So our attendee is asking, the dividend yield shown in Bursa is for last dividend yield. How about historical dividend yield for the past 3 or 5 years?
Okay, so let's see. Let's explore this thing together lah. All right. Usually I only use Bursa Marketplace for the price trend and stuff like that because it has the free tools and stuff. For this one, I don't think it has lah. At least I couldn't find it somewhere here lah. That's why I only like go with last dividend. No, it's actually, what is this? This is dividend. They only give you the annual dividend, 5 years average. Let's check income statement. Let me just double confirm whether it has it or not. Oh, it has. So it's here. So I found it. So it's dividend per DPS, which stands for dividend per share, common stock, primary issue. 9 cents, 9 cents, 887. Actually, it's from right to left lah. All right, because the right one is the right one is actually at the 5 years ago. The later one is actually at the center of the screen lah. So that means you say this stock has been paying out dividends consistently and more dividends as time goes by lah. So this is actually definitely a good idea lah. So last time it pays 7 cents, now it pays 9 cents lah. All right.
Okay. Right. So that's how you can check for your dividend yield. All right. The next question is about REITs, which is your forte. So they are asking, the share price of REITs have fallen very much recently. What happened?
Should be the BRL, it should be the OPR lah, I suppose lah. All right, because OPR go up, of course the borrowing cost, the borrowing cost will actually go up, right? And because like in Malaysia, like logically speaking lah, people don't buy property with 100% cash. All right, not everyone is that rich. Even if you're that rich also, you still tend to borrow to buy properties. Okay, so what happened is that every single REIT in Malaysia, and as well let's just talk about Malaysia lah. Every single REIT in Malaysia has borrowings. All right, so therefore, and the borrowings will go up to millions depending on what sort of REITs. Okay, now so therefore, if the borrowings, okay, now there's two types of rates. Some actually use fixed rate. Some use floating rate. So you got to check what is the proportion like? All right, if a REIT has fixed rate, most of its loan in fixed rate, then at least it's not as badly impacted. But if the REIT has a lot of borrowings, fixed at floating rate, means it's affected because of the OPR and stuff like that, then of course the people may foresee that the REIT will actually generate lesser income, and therefore there will be disappointments when it comes to the distribution. Okay, so this is what could be happening, what people may foresee, and therefore they just sell off the stock lah. But for me, from an investor point of view, I like it when these things happen lah, because last time, if I want to buy any REIT, any Malaysian REIT, it's very expensive as compared to Singapore REITs, because last time the dividend yield is about like 4.5, 5.5, 6. At most you can only get about 6-7% lah. All right. So if you want to achieve my kind of 6.8%, very hard to do for Malaysian REIT lah. But now, good chance lah. All right. Like just now you calculate IGB REIT even at 1.5, at the price of 1.51, the REIT is about 5.3%. If I buy at 5.3% and my yield is, my own portfolio is at 6.8%, I buy this stock, I will jeopardize my own average yield lah. Then not so nice already. But now the lower the price, like IGB REIT, it drops in price, then it's more enticing, or it's more attractive. That's why I say low price is good ma. All right, but who knows the future, right or not? The Bank Negara Malaysia, they might retain the OPR at 3.25, which is the current rate, or it will increase to 3.5, or it will go back to 3.0. Who knows the future? But anyhow, I believe that property is still property lah. The same property, Mid Valley and the Gardens, people will still go there and shop lah, and people who do business there will still be most likely there lah. Okay, you still can go for your Starbucks coffee there. You still can go and dine there, meet people there, shop there. Everything is there lah. All right, it's still a money-making business. So fundamentally, it's okay. It's just that whether in the future the OPR rate will improve or not improve in the future. That's all only lah. Hello, Anna?
Yeah. All right. Okay, excellent. So our next question is, let me try and understand now. Okay. He is asking that how do we choose a proper counter to invest in? Because after filter, you still have left a few choices of counter.
Okay, sorry, repeat again. How do you
choose a suitable counter to invest in, as it have 24 filter by screener?
Good question. The first idea is this. I'm not too sure how many people of you here have unlimited capital, but I'm sure most of you, if you're listening, you may have limited capital. Okay, so the first idea about investing is this. Number one, you want to maximize your return from your limited capital. Okay, so maximizing return means to say at least you must make it count. That means to say whatever counter you buy, whatever stocks you buy, it must be profitable. So in order to be profitable, you cannot first look at the stock price. All right, because you cannot make any sort of decision by looking at the stock price first. That's why it's very important. That's why I show you how to look at the income statement first. All right, at least the basics lah. Like this one, revenue goes up, very good. Okay, the profits goes up. Where's the profits thing? Okay, the profits are there, very good. The dividends per share go up, very good. All right, these are all common sense stuff lah. You know, a lot of stocks they may not have, so you don't need to buy them. Just forget about them. because they don't have cash flow. Like this one has cash flow, so very good. So look at all these sales, profits, dividends, cash flow, balance sheet strength. All right, not I would say if you can do these things, you will actually eliminate 90% of the stock. All right, you can actually flush them down into the drain. All right, so first of all, if you flush them down, you will minimize your risk of investing. All right, you become a very conservative kind of investor. That's number one. Number two, whatever you buy, there will be profits. The question now is, how much are you willing to pay to actually buy the shares of a profitable company? So an attractive investment is, let me rephrase, a good stock or a good investment is only good if the thing is good and it's cheap. All right, let me give you an analogy. It's like going to the supermarket to buy fish. You have, first of all, like if you accompany your mom or your girlfriend or your wife to a supermarket, the first thing you look at is the quality of the fish, whether the fish is fresh or not fresh. If it's not fresh, whatever price you put there, also no use, because the fish is not edible. It's not fresh anymore. All right. If the fish is fresh, then only we look at the price. All right. Usually, aunties are very good in telling whether the price is good, or not . All right. If the fish is overpriced, they will know. If the fish is cheap, then they will buy more. Then of course, for the families, you get more fish to eat . So if you think like that, you will do very well in the stock market. Right, Anna? Hello? Are you there? Hello, Anna? Are you there with me?
Can you hear me? Yeah, okay.
Yeah, I can.
Okay. So next question is there anywhere we can get the average PE of a stock? Some IB reports have this information which I find helpful.
That one is like promoting my own website already . But then that's out of the case. Okay, of course one of them is with my website, because I do calculate them. Okay, number two is, of course, you can actually look into the company's reports. Some don't have it. You know why? Because they don't have E to begin with. It's price to earnings ratio. First thing you need to look at is whether the company has earnings or not. That's why my emphasis is on profits. So only if the company has earnings, then we can have PE ratio. So a lot of stocks, they don't have consistent earnings. Therefore, it's redundant for them to put the PE ratio, because it's like discouraging people to buy like that because you don't even have a PE ratio to begin with. Okay, so some companies, they are very good, they are highly profitable. Then of course they can put because they want to they can calculate nicely for you, and of course it's usually a good sign . All right. You can actually check out annual reports, or alternatively, I'm not too sure which particular website you can actually try. I'm not too sure. Maybe, but I never really use this. I never use any other tools apart from my own tool . Like some other people may use KLSE Screener or i3 Investor or something like that . But I'm not too sure because you need to know how to use them to make good use of them.
All right.
That's why I think
Okay.
It's best to do your own calculation. It's actually worth the time to do it on your own.
Yes, I agree on that. Okay, let's wrap up and we'll go to the last two questions. The next one is asking about companies are going to decrease stock price after they have paid dividend. What is the point they pay dividends?
It depends. Okay, Uh, how do I answer this? How do I answer this question? Okay. Okay. So in the short term, let's say for example, there's a stock, and then the price is like $1, and then of course, and then it says, okay, I will be declaring, let's say, 2 cents in dividends. All right. So of course, there will be people who will. There are some stocks that will have the tendency or the possibility that it will rise to $1.02, and then after it has paid the dividends, or whether or other after that, after the cut-off date lah, all right, I suppose, then the stock price will drop back to $1, right? This one for me, I don't think is a big issue lah, all right, because it's just that one is just a small glitch in terms of price. For me, my perspective is always on the long term, because it depends on ultimately on reason number one, the objective of why you want to buy the stock. All right. How do you intend to actually profit? Is it you buy the stock and then you just wait for it to go up and then you sell? All right, or is it a recurring thing whereby you buy the stock and then it keeps giving you dividends, regardless whether the stock price goes up or down, you still get your dividends. So your objective is still very important. So I think if you have the perspective of this, if you have this big picture in place, then of course this small little this particular issue is actually quite negligent lah. All right, negligible in if you have this kind of perspective lah. All right, but of course if you have a different objective, then what you ask could be something significant lah. All right, something to look at. But of course, to me, I don't see this as a very big issue lah. So that's my take on it.
All right. Okay. Excellent. So our last question for tonight. Let me see. Okay. Let me find a question first. Okay. Okay. Isn't getting foreign dividend, like dividend from Singapore stocks, costly because of the high handling fees and foreign fees as compared to Malaysia?
It's more expensive than Malaysia. Yes. That's why if you want to buy Singapore shares, all right, I buy dividends because number one, you have to earn back your brokerage fee lah. All right, because in Malaysia you can buy shares. The transaction fee can be low. It depends on which broker you go to lah. All right. So there are many brokers which actually offers pretty attractive fees. You can check out like places like Rakuten Trade lah, is a new boy. That one I think is not too bad lah. Okay, the fees are actually quite cheap lah. All right, so which makes it encouraging for trading. Now for Singapore shares, from our point of view, because we are Malaysians, the brokerage fee can be quite expensive. So therefore, I make it a point. If you want to go in to Singapore, you got to buy in bulk. All right, that's the first one. You got to bring your transaction costs down. Okay, so let's say for example, per transaction, the brokerage fee is about 30 Sing dollar. All right, so if you want to keep your brokerage fee under 1% of the investment value, then we take 30 Sing dollar divide by 1%, which is like 3,000 Sing dollar, which means say every time you buy, you may want to invest about nearly 9,000 ringgit per transaction. So if you're investing $9,000, all right, if it's a big amount for you, then you have to go with dividends, because you have to earn back your investment capital. You have to somehow earn back something lah. All right. So if you try to trade in Singapore, try to do I want to buy and then I want to sell, it will cost you a lot of money. All right. That's why it depends on what kind of game you're into lah. All right. And that's why knowing your objective is very important. Now, when it comes to handling fees, there are handling fees. For example, for me, the Maybank, I'm using Maybank IB. Okay, so per distribution, the handling fees I think should be around 5 ringgit lah, around there lah. Okay. So if you buy in bulk, then the handling fees will be very, very minute, very small and insignificant, as to compare to if you actually invest in smaller quantities lah. Let's say you buy only, instead of investing 3,000, you only invest 500 Sing dollar. Then of course it's going to be very significant. It will eat up your dividend yield and stuff like that. So I think, so that's why in order to reduce the percentage of your handling fees, number one, you can actually buy in bulk. Number two, you can actually do repeat purchases. So if you want to do repeat purchases, then you have to make sure that the company that you invest in is highly profitable and is the type that can actually really pay you good dividend yields. And that is very important, at least to me. All right, that's how you can actually really make very good, consistent flow of passive income over the long term.
All right.
Right.
All right, excellent. Thank you, Ian, for tonight's webinar session. Before we wrap up our session tonight, let me get to the next slide, which is the next webinar. For the next webinar, we'll be talking about the principles of value investing. So actually tonight's questions, a lot of people also ask about value investing and how do you select stocks and invest them. So this one we will cover in our next session. And the time and date will be on the 3rd of April and time will be on 8:30, and below this is the registration link. So what I'll do is I'll copy the registration link now and put in the chat box. So for those of you who are interested, you can register lah. Okay, let me see. Okay, you should receive the registration link already. So remember to register if you want to listen to this webinar. And for those of you, if you have any questions, you can email to Ian at hello@bursaking.com.my. We still have a lot of questions, very overwhelming. So thank you very much everyone for tonight's session and hope to see you in the next webinar. So good night and have a good evening.
Edna, right?
Yes.
Edna?
Yes.
Can I add on a bit?
Yes, sure.
All right. Instead of hello@bursaking.com.my, you can actually do this. I have another email. I think because usually I go and check my personal email. So if you've got any questions, you can actually go to ianthai888@gmail.com. So you may put that in the what they call the chat box, and yeah, I'm happy to actually connect with anyone who asks questions and any one of you lah.
Yes.
Right, that's about it. Thank you so much. Yeah.
I will also type your email in the chat box and everyone should be able to see it. So if you have anything, you can also email him at the email that I typed in the chat box.
Okay.
So, thank you very much, everyone. Have a good evening and see you at the next webinar. Bye-bye.
See you. Bye-bye.